Welcome to Market Call. I'm Morella Fernandez. Javed Mirza is on the show today. He's a technical strategist at Raymond James, and he is taking your questions on technical analysis. Here's how to reach us. 1-855-326-6266 if you want to call in. You can email your questions as well, marketcall@bnnbloomberg.ca. Javed, thanks for joining us today. Let's talk about the TSX, which has been hitting record highs lately, record closes as well. Do you think it could stay the course? What are you seeing?
Yeah, great question, Marilla. So what I would say here is a couple of weeks ago, we just highlighted that it looks like we're supporting the way equity markets are positioned is we're seeing a new intermediate term or 3 to 6 month rally phase take hold that should have upside by time into August. So that's what we're seeing technically. We're kind of perplexed where we are in the market cycle, which I'm sure we'll get into throughout the course of the program. At the start of the year, we were warning clients that, look, a 4-year cycle reset was going to take hold, which is typically 15 to 20% correction that lasts around 34 weeks. And so I think that's what we saw during the tariff tantrum. Just giving the inner sector rotation and what we're seeing in markets, we're not sure where we are within the cycle right now, but in general, what we're seeing is we've got a rally phase for equity markets into August.
Are you seeing different patterns in the U.S. than you are seeing in Canada?
That's a great question. What we are seeing in Canada is basic resources really leading the charge. So I'm sure you guys are getting a lot of interest in gold. We've been talking about that a lot. And we're seeing industrials begin to pick up and move here as well. But in general, information technology, that's been kind of the leader of this bull run, especially in the US. And it's been leadership in Canada as well. Over the last couple of months during this corrective phase, it's come off, but it's trying to rebuild and reassert its leadership position.
When you talk about people going to gold, right, that gets bounced up a lot. Are you seeing the same trend beginning now in silver? Some are saying silver is beginning to take off and there's a gap to close there.
Exactly. What we're seeing here is a catch-up trade. This morning we recommended or highlighted silver name Aya to our clients, just highlighting that its technical profile had improved. I know we're pushing towards key resistance around 36 here on silver. And if we can get above that, the next key level is going to be 40. But definitely technicals on silver look strong. I think the broader picture and the big impetus and the big driver in what's going on with silver and precious metals, I think, is actually the US dollar. So if we can pull up the US dollar, what I can highlight here is, so just looking at the Dixie itself, but what we're highlighting and what we've been talking to clients about is on the Dixie, it's trading at this key level right now. So this is the Bloomberg US dollar spot, different from what we're used to, but the same setup exists, is that we're testing these recent lows here. And if we can pull out a longer term chart, 3 or 5 years, perfect. So what you can see here quite clearly is we peaked towards the end of last year, and then since then we've been heading lower. And what commodities are priced in the dollar. So if the dollar is heading lower, then that's going to be a tailwind for commodity prices. So we've been talking to clients about this for the last couple of weeks, just highlighting that the US dollar weakness here is going to be a tailwind for a variety of commodities. So natural gas, copper, gold, and then silver, as you highlighted too. So I think the bigger reallocation that's underway is away from the US dollar, potentially as reserve currency status. There's a lot more going on geopolitically in terms of BRICS. But in general, what's happening geopolitically is going to be reflected in the financial arena as well. And so we're seeing that here in the dollar. But the bottom line, the key takeaway is the TSX made new highs prior. And I mean, we still haven't seen the S&P 500 reclaim or the Dow. That's really positive. So what we're seeing here in Canada is assuming kind of the pole position or leadership status in North America. So everything that we're seeing here is quite positive for the TSX and Canada in general.
Got it. Okay, we're going to take a quick break. Javed Mirza joining us from Raymond James. We're going to take your questions today on technical analysis. Here's how to reach us, both the phone number and the email, We're back in a moment. Welcome back to Market Call. Javed here to take your questions on technical analysis. We're going to start with an email from Kara, who says, would you please ask Javed for his technical analysis on Jameson Wellness, provider and maker of supplements and vitamins. When you take a look at their chart, what do you see?
Perfect. Great question, Kara. So what I would highlight here is we bottomed back in 2024. We've got defined uptrends. We've got higher highs and higher lows. This chart looks good. We remain in this, trading range or base, I guess I would say. Looks like you're pushing higher. Next upside target on this range would be around 40.50. So I like it. It looks strong here.
Okay, something if you're already invested in to hold on to, or at least dip in because there's some growth there. Let's go to the phone lines. John is on the line from London, Ontario. Hi, John.
Hi, Marilla. Hello, Javed. Good to have some technical analysis. I hope you're right about that uptrend technically until August, because in September, Trump is going to have to make nice with the markets leading up to the midterms. Investors Daily has recommended certain stocks based on earnings growth. I'd love your technical analysis on the company Axon. Thank you.
Thanks for the question. Tell me about Axon.
Yeah, so Axon, I think they produce like the body cameras and a variety of equipment for law enforcement. So if we pull up the chart.
I don't think they have the chart there.
Oh, I see, okay.
Pull up yours and you can sort of describe to us what you're seeing. Is that possible?
Yeah, or we could go to another name as well. Yeah.
What's similar to what's on Axon? Are there other companies that do the same thing? Top of your head?
Top of my head, no, but we could maybe do Broadcom, if I know
Sure.
There's a question on that as well.
Let's pull up Broadcom, and we'll talk about Broadcom instead. That chart is coming up right now.
Perfect. Awesome. So Broadcom in the semiconductor space had that big pullback along with pretty much the rest of the market during the tariff tantrum we saw from February through to April. Pushing out here to new all-time highs. This is quite positive. I mean, this long-term chart looks fantastic. Nothing else to add here, really. Like, this is a great name. Definitely don't mind adding here at these levels. Technically looks strong, and it's in the right area of the market in terms of semiconductors have really started to strengthen and begin to lead the market higher again. So this is a positive looking chart.
So at the 264, do you see some forward growth in the stock price? I couldn't tell from the chart because, as you said, it's breaking out now.
Yeah.
Do you think it might continue to climb?
100%. So this stock, just from what we're seeing, we're actually in the process of doing a review on this as well. And it just, the breakout to new highs in an intermediate term uptrend, we've got a series of higher highs and higher lows. All of this is telling us that technically it looks strong. And then in terms of our broader market cycle work, we talk about these different quadrants. I won't get into too much detail, but essentially Broadcom has pulled back, but now is attempting to reaccelerate, and especially the breakout to new highs here is positive. And recall, the S&P 500 has not yet made new highs, so this is definitely showing that the stock is a leader.
Got it. Okay, let's go back to the phone lines. Joseph on the line from Montreal today. Hi, Joseph.
Good day. Thanks for taking my call. David, I want to hear what you have to say about Chemico. It's doing pretty darn well for itself lately, but when I look at the charts, the longer-term charts look all right, but the nearer-term, it looks like it's due for a pullback, relative strength in overbought territory, getting close to a Bollinger Band. Stochastics look like it's starting to turn down, and we're about to enter a seasonally weak period for Chemico, if my research is right. I want to get your opinion on Chemico right now, and if you're factoring in seasonality to your analysis, be it for Chemico specifically or generally. How do you view seasonality? Thanks in advance.
So Chemico, dramatic climb back up from that April low, now at 81.74. Tell me what you're seeing in the trend here.
Perfect. If we can pull up a daily chart, like just over the last, call it, year or so, I can dive into the details.
Okay. So we'll pull that up. And generally speaking, is this a company that you guys like, invest in?
Yeah. So Brian MacArthur, he's our fundamental analyst who's covered it. He's had a great call on this name. So recently, we highlighted that Chemico, that something was turning around here. We saw Chemico move above some key technical levels at the 50 and 200-day moving averages, start to see some buying pressure coming in. So we actually recommended this to clients right around here. It's funny because one of our sales trading associates reached out to us a couple of days ago asking us, especially on Chemico, and our response is the same that we have here, which is it's extended here short term, likely to see a pullback, call it. I think off the top of my head, there's a gap here around 73. So we're likely to see near-term consolidation. It's extended, but definitely we've broken this downtrend and are within a new intermediate term uptrend. So what I would not be surprised at is see a little bit of a backing and filling here, pulling back, call it to around 74, 75, and then broader reacceleration after that. So that's, Joseph, great point on seasonality as well. Right now, the trend remains up. I'm more concerned about seasonality for the markets in general once we get through this rally phase that we're seeing broadly. So I'm sure you've heard that saying, a rising tide floats all boats. So I think we've got that situation right now. We're entering into a period of decent seasonality for equities. However, August and especially September is the worst month of the year for equities historically.
In a volatility sense or just generally?
In price, in terms of price, typically negative returns and heightened volatility too. So I don't mind being long this name into through August or equities general, but at that point I'd be looking to manage some risk.
Got it. Okay, let's get to one more caller before we have to take a break. Peter's on the line from Victoria with his question. Hi, Peter.
Hi there. Thank you for taking my call. My question is on Algonquin Power. I'd like his opinion. Thank you very much.
Okay, thank you for the question. Let's pull up Algonquin Power, and generally, what are your thoughts on this stock? It's at $7.98, trading a little bit down today.
Perfect. So it's funny because I was actually this morning talking to our fundamental analyst who covers this space, Daniel Magder, and the conversation revolved around that we're seeing signs of improvement. So I think he's seeing signs of improving sentiment. Technically, we're starting to see, and then this is broadly this space, so Boralex, Northland Power, all of these names have been in these bigger downtrends, starting to firm up, starting to put in lows, and putting in higher highs and higher lows. So if we put up a one-year chart, I can kind of get into the particulars. And so this is what we were talking about. So for most of the last, call it 2 years, we've seen this bigger downtrend, starting to see the whole space put in a bottom here, seeing this series of higher highs and higher lows. So we had a big pop up, I think it was on earnings a couple of days ago. Definitely would expect some near-term consolidation. But after we get through that consolidation phase, we're in this uptrend here, so I would expect that uptrend to continue.
And are you seeing, you mentioned you're seeing it generally in assets or equities that are just like Algonquin Power?
Exactly. So if we can pull up Boralex, ticker BLX, I can highlight the similarities. Great question, Marilla.
Okay, so we'll pull that up in just 1 second and take a look at that downward motion for quite some time, as you mentioned, and now the upward scale. And you're seeing is that a reflection of is that a cycle that you're seeing in there? Is that a reflection, you think, of world events? What's playing into that?
So I think a big driver is going to be interest rates. And I think we're seeing a shift potentially into a better interest rate environment for these plays, or at least that's what the market is telling us. Ultimately, the market is people are voting with their dollars. And right now, people have been selling or not very interested in this space. But now you can see that we're starting to see an improvement, broadly speaking, in this space. So generally, these guys have been laggards, but they're turning up now. So definitely seeing an improvement in trend. So I don't mind nibbling at these levels. These have been laggards, and normally we'll look for leaders, but definitely seeing one of the really important things that we try to flag to clients, which is signs of a positive trend change.
Got it. Okay, we're going to take a quick break, line up some more phone calls and some emails. We're back in a moment. Welcome back to Market Call, and thanks very much for joining us. Let's go back to the phone lines. Nizar is on the line with a question for Javed. Nizar, what's your question today?
Oh, great show, Marilla. Good to see you, Javed. May I have your thoughts on Air Canada, please? I had an opinion on fundamentals on Air Canada from a recent guest. Your technical opinion will be really helpful. Thanks for taking my call.
Okay, thanks for the question. Air Canada has really tanked in recent months. It was lower than it was during the pandemic.
Yeah.
And a lot of people are asking what kind of comeback is possible here. When you look at their lines, what do you see?
Perfect. Great question, Rola. And Nazar, thanks for calling in and asking. So we actually were highlighting to clients about 2 months ago that this was starting to put in a bit of a bottom. Now, we saw that across the board, like with the U.S. airlines, United Airlines, Delta. And our analyst in the U.S. side, Savvy, she had a great call on this as well. What I would highlight here is we've had a big move higher. And normally there's two ways you can consolidate. And after these big moves, so the first one is you consolidate in price. That's where you have a sharp pullback. The other way you can consolidate is in time, where essentially you kind of move sideways. So that's what I think we'll see, at least for a little bit here, a sideways consolidation, maybe with a slight downward bias. In technical analysis, the parlance is a flag. So if you think of a flagpole, here's the flagpole, and then here's the flag kind of hanging sideways. And that typically is a consolidation pattern within that bigger uptrend. So then ultimately, this should resume the uptrend and move higher. So I don't mind adding it on weakness here, especially given our view that I think we're going to see equity markets try and push higher through into August. Once we get into August, that's where I think I'd be putting on the brakes, or at least assessing risk control levels.
End of August kind of thing. Got it. All right, let's go to the next phone call. We have on the line Mary from Burlington, Ontario. Hi, Mary.
Hi, Marilla. Hi, Javed. Thanks for taking my call. I'm wondering if you can please give me your opinion of Corning. Thanks so much. I'll hang up and listen.
I haven't looked at Corning, I think, in some time. Can we pull up that chart and see how they're doing? And Javed, if you can tell us what you see. Clearly, they're on a move higher after that bit of the dip at the start of the year. Everybody had, so they're at almost $51 today.
Yeah, great question. So same thing we've been saying with a lot of these charts here is this is one of the leaders here, and it's also been a defensive place to hide. It's one of the relative performance leaders. So we've got, since the bottom back here in late 23, we've got a series of higher highs, higher lows in place within a defined uptrend here, and it remains positive. So given our view, definitely don't mind adding exposure here. And given our broader view on this rally into August, looking for further upside and very likely new all-time highs on this name.
As you know, some people feel like if they've missed the dip, they don't necessarily want to buy in if they're buying it again, or just generally they feel like it might come down again. Right. How do you counter those concerns? That's
a very great question. I talk about this with clients daily, and the best way to do it is to scale in. So we're all human, so you have that natural fear of missing out, and then you feel like, hey, am I buying at the highs? And then the rug's going to get pulled out underneath me, right? So the best way to approach this is to scale in, and that's what a lot of the top traders and a lot of the trading market now is controlled by algorithms, and I'm sure they function in a very similar manner. So define the trend is up, and within that, continue to allocate as long as that trend remains positive. So maybe allocate 10, 20% of your original purchase here, see what happens. If you buy it and a week or two from now you're in the green, that's telling you the market's agreeing with what you're doing, and then you can add more exposure. So that way, it's the best of both worlds, because if it does pull back, at least you haven't allocated your position. And if it does run higher, then you're not panicking and feeling like you need to rush in, because you already have a position in place. You're taking some of the emotion out of it, generally speaking. That's exactly what you want to do. Okay, let's go back to the phone lines. Ben is on the line from Kingston, Ontario today. Hi, Ben.
Hi, thank you for taking my call. Javed, welcome back. My question is on Apple, and another analyst was able to let me know that supply chain is not really affected by what is going on with Apple right now. But I'd like to have your outlook to the end of the year when the sells through the Christmas time, and what's your outlook? And right now it's kind of resistance is around $200. What do you think about it? Thank you again, and I appreciate your call.
Okay, so Thank you for the question. I'm interested in Apple because it does have a lot going on with tariffs from Washington, its movement in AI. So there are a number of different things affecting this particular stock. It hasn't recovered as much as some of the others have. So when you look at the fluctuations, what do you do with that?
Yeah, great question. So I think it would be this similar approach we highlighted on Corning, where I don't mind nibbling and taking a position here. And you said, I think your question, the way you framed this was fantastic, because you said, look, there's a lot of moving parts with Apple. Nobody knows exactly how it's going to play out. And ultimately, the price action is determined by people voting with their dollars, right? And that's ultimately what we see in the market. So if I don't mind taking a position here and nibbling, it is a laggard. Like, recall when we were looking at Broadcom, it's already breaking out to new highs. That's telling us that the underlying fundamentals for the stock are very sound and people are comfortable buying it, especially as it breaks out to new highs. But that's not the same picture for Apple here. So what I would say is, it's been a strong long-term winner. I definitely don't mind adding here or beginning a position around the 200 level, but you can see here support is right near, as Ben alluded to, like closer to this. I think it's probably around 190, 200. If you buy the position here and if you start heading lower and if you're down, call it 5-10%, then that's where I would look to exit that new position you had put on. But if it continues to work and if it starts to push higher, and then if you're up 10%, like let's say we get 220, then I definitely don't mind adding more exposure. But the way I would start it is an entry-level position, I guess, or a beginner position, and then feel things out from there.
Got it. Okay. Ben, I hope that helps you out on your question about Apple. Let's go to Gary from Hamilton, Ontario, with his question. Hi, Gary.
Hi, Mirella. Good afternoon. Could I have the technical analysis on Thermo Fisher Scientific, please? Thank you.
Okay, thank you for the question. Let's pull up Thermo Fisher and see what's going on with that stock today. Javed, what do you see here? They are down to 401, still moving in a downward way today.
Yeah, so a lot of the charts we've seen have looked a lot better, but what you can see here is we've got this series of lower highs, lower lows. This is one of those situations where unless you have a very high conviction from a fundamental perspective, I would wait for things to change. This is definitely from a leadership perspective, something is going on here. And one of the things I would say is the charts are telling you a lot of times ahead of the curve what's going on. Like, I think if you look back all the way to the 2000s with Nortel, the story behind it was great, but the stock was heading in the wrong direction, and this is what's going on with the stock. So this is not one I'd be looking to add exposure to. If we saw a trend change or a bounce, and then I don't mind nibbling a little bit, but this is one I would avoid.
Got it. Okay, we hope that helps. Let's take a quick break. When we come back, Javed's past picks. Back in a moment. Welcome back, and thanks for joining us. Javed is here, and we're going to go through his past picks from April 12th of 2024, so now more than a year ago. At the time, you picked Kushal, which is trying to buy some 7-Elevens from the Japanese owner. That's an ongoing process, not an easy one for them. It was recommended at 75.43. They're down to 72.99, so a 3% drop return and a 2% total return drop. What do you see when you look at their line chart? We brought up the 3 years here.
Yeah, so it's been struggling compared to the rest of the leaders. When we highlighted it, I think it was back around here somewhere, it had started to turn up and then push higher. But unfortunately, given what was happening with 7-Eleven, this call absolutely has not worked out. We've underperformed the market, unfortunately, on this call. So this is kind of in no man's land. You've got that overhang with them attempting to buy 7-Eleven. And if we can pull up Loblaws or Metro out of those charts, what they'll tell you is just the relative performance. So Loblaws, I think, is just L, and
they've been moving up.
that you can see there quite clearly. So yeah, that was not our, not our greatest call.
Yeah, and it's something again that because it's a longer term conversation about the 7-Eleven deal, it could change, but who knows when that momentum will be picked up.
You nailed it.
Got it. All right, let's go to Alamos Gold, which was your pick last year in April. At this point, it was $20.97 when you recommended, up to $37.39 now, 78% upside, 79% upside for total return. And we talked a little bit about all the movement to some of the precious metals as people fear uncertainty. It's just been a straight rise. There's been talk about how high gold could go. When you look at Alamos, what do you see?
Yeah, so this is one of those names that just continues to work. The entire space has been on fire, obviously with gold, around 3,500 here. So this is the kind of chart we want to see. This continues to work. What I would say is, for precious metals, we're approaching a period of negative seasonality. That's typically, call it July, August, September, October. And so what I'd be doing is, if I own these names, I'd be setting some risk control levels and then looking to trim if we move below those. If I was looking to add, same thing. I don't mind adding a little bit of a starter position, but I'd be keeping some powder dry, because it's very likely these names are going to see a bit of a bigger pullback over the next couple of months when they enter that period of positive seasonality, and that's where I'd look to add exposure.
Got it. Okay, let's move to your third pick from last year, which was Finning International, financial services, Caterpillar, that kind of thing. Recommended at 42.69, now up to 50.74. So a 19% upside return and a 22% total return. And again, it was April 12th of 2024 when you recommended it. Let's look at this chart and tell me what you just threw in.
Yeah, so I think this is when we recommended it. So you can see why we recommended it is because we're starting to print a series of higher highs and higher lows. A lot of the work that we do, we don't show on screen, and we look at a lot of cycle analysis, where we are in the business cycle, and then we can talk about that a little bit later on. But the bottom line is, this was set up, in our view, nicely for where that was. It's correlated with copper. And so what we're seeing now is, over the last 2 months, is we've seen a big breakout here. I think our fundamental analyst, Steve Hansen, has done a great call in terms of highlighting the difference between this and one of its peers, Toromont. So this has really lifted the stock higher over the last little bit, but this is a good-looking chart. Higher highs, higher lows. We like it, and like I said, should see some further upside, printing new highs, and further upside by time into August.
I do want to ask you, because you mentioned that you don't know where we are in the cycle. There's some question about that.
Yeah.
What is it that you're seeing that makes you go, we don't know where we are right now?
Yeah, Marilla, that's a great question. And this is the first time we've worked together, so you'll see as we get into our cycle work. But essentially, if you look at my arm here, this is the longer term cycle we've been in from, call it 2000 to 2025, where we are now. And maybe if we can pull up 20 or 30-year chart of the S&P 500, I can illustrate it there as well. But essentially, within this longer-term secular bull market, you have these 3 to 5 year cycles that we call the 4-year cycle. And that's essentially just the business cycle. So you get this period of contraction and expansion. So that, in our view, was a low. Right here, that was a low. Right here, that was a low. So we were telling clients here in October, look, we think a new cycle is starting that has upside into the second half of 2025, first half of 2026. And then at the start of this year, we were telling clients, look, there's 5 different reasons that we think a big correction is going to occur this year. So we've been really, really happy with our call, essentially monitoring markets since 2018. But we had the correction, but it was that recovery was so quick. Like, it was really quick. So the good news is, we told clients around the April low, look, I think there's a tradable bounce coming. We got that right. What we didn't get right is, after we got that bounce to call it 5,600, we felt like we were in no man's land, but markets just continued to kind of grind higher. So now the price action is telling us that it's the real possibility we could be starting a new cycle. Still looking for some confirmation. I mean, Broadcom breaking out to new highs is definitely a positive confirmation, but that's what I mean by I don't know where we are in the cycle, because here's the expansion phase of the business cycle, and then you get the contraction phase. So we were telling clients, look, we think the contraction phase is coming. We thought it would last longer. Historically, the contraction phase lasts around 34 weeks, and that's literally what we saw here in 2022, where you had a price correction and a time correction. But now that correction was so quick.
Yep.
But the real risk is that we're now starting a new cycle. So we're just looking for a bit more confirmation where we are.
Trump disrupting the cycle. That's what we're going to blame. All right, we're going to take a quick break. We're back in a moment to take more of your questions. Stay tuned. Welcome back. Back to your phone calls. Jeffrey's on the line from Scarborough, Ontario, with a question. Hi, Jeffrey.
Yeah, good afternoon. Thank you for taking my call. I would like to ask your guest on his opinion on Brookfield Corporation, and if possible, United Health also.
Okay, so let's take a look at Brookfield first. And we've got a 3-year chart up.
Yeah. This chart looks great. I mean, Brookfield has been a long-term winner. Here's the tariff tantrum right here and the pullback. Looks like it wants to push higher. I think this is one of those, Canadian stalwarts, like the Canadian banks. That's a great long-term buy and hold. And I think for a lot of people listening in on these calls, typically these corrections are great opportunities to add some exposure to these positions. And when you're investing, you're always looking at a very long-term time horizon. This is not like, 1 year or a couple of months. This is money you want to be looking at down the future, in the future. And this is one of those names that looks really strong here. So definitely don't mind adding.
You brought up the tariff tantrum, and I'm wondering, because it's such an anomaly, what do you do with that? Eventually, do you think when you are looking longer, that's something that just gets ignored?
Yeah, so I mean, we saw something similar with COVID, where we had that big correction and then a rally, but that was, I mean, we viewed that as a black swan event. This is more man-made. And typically when we do see these corrections, the 4-year cycle reset, it's essentially a very big market-moving event that typically has some legs in terms of both price and time. But like I said, I think you had the tariffs on and then you had the tariffs off. So, and that's where, Trump got that nickname, Taco.
Yep.
But everything that we're seeing suggests that the market has repaired itself and wants to move higher. So I think for most people, at the margin, you can make an adjustment, but I think it's very dangerous if you're making really large adjustments to your portfolios.
Got it. Let's go to Dave. Dave's calling from North Bay today with a question. Hi, Dave.
Thanks for taking my call. I'm looking for your technical analysis on Boyd Service Group. Do you see a breakout possible in the next 3 to 6 months? And do you own the stock? Thank you. I'll hang up and listen.
Okay, so Boyd Service Group, they do collision repair centers. And is it something that you guys have invested in before, continue to invest in? Is it something you're interested in?
So, I mean, we cover the stock. Steve Hansen out of our Vancouver office is the fundamental analyst on this. Technically, I mean, I think we highlighted it back here just for clients, just saying, look, it looks like it wants to break out, and we're seeing relative strength improve. But since then, it's just been in this kind of sideways no man's land. So right now, it's a laggard. I'd be waiting for signs that the trend is changing. But unfortunately, what we're seeing right now is a series of, lower highs, lower lows, and that's not where you want to be. So this is not something that, from our work, looks compelling right now.
Okay, let's go to Amrit, who's calling from Victoria today. Hi, Amrit. Amrit, are you still there? Okay, it looks like we may have lost him. He had a question about Citigroup, so we'll pull up Citigroup's chart and take a look at where they're at. Obviously, moving up, same sort of dip that everybody else had at 77.07 today.
Yeah, so look, this chart looks like a lot of the charts we've been highlighting here, where you've got a series of higher highs, higher lows in place. It's repaired the damage from the tariff tantrum, and looks like it wants to push higher. So you remain in this range here. Looks positive. You're in the middle of the range. I think we're very likely to see new highs before we get into that more choppy period in August. So looks good.
All right, we're going to take a quick break then. We'll be back with Javed in a moment. Stay tuned. Welcome back. Let's go to Debbie. She's been holding on the line from Vancouver with her question. Hi, Debbie. Debbie, you're there?
I am here.
What's your question?
Now?
Yep, we can hear you.
Just curious, please, a comment. CNQ.
CNQ. Okay, we'll pull up CNQ and have a look at that chart. Thank you for the question today. What do you see for CNQ?
So unfortunately, CNQ still remains in this broader downtrend. So, as we've been highlighting, we've got lower highs, lower lows. Here's the trend channel. And the positive news is it looks like it's testing the upper end of this range. If we can get above this high here, I think it's around 43 or 44, that would get us more constructive. But right now, we're still in that downward sloping trend channel, so we're kind of cautious on this name.
Not somewhere you would invest in right now.
No.
Got it. Okay. Let's move on to the next caller, Brendan from Ottawa. Hi, Brendan.
Hey, how are you?
Good, thanks.
Good. So I'm curious on anything you have to say about Hive Digital Technologies. I'm fairly new to investing and have actually grown a bit of an interest in the technical analysis side of things myself. I feel like we've already kind of hit a bottom, and just curious on what you think of maybe the next year to year and a half might hold.
Okay, having a look here at Hive Digital Technologies, which is at, I have it at 261 today, just we don't have that daily chart. But what are you seeing when you look at that?
Yeah, so I think to Brendan's point, we got a longer double bottom here from 2023 and 2025. If we are starting a new cycle here, then that's going to be positive for assets across the board. And Bitcoin traditionally has been more of a risk-on asset. So this is one of the miners, I believe. So that should be a tailwind for it. But like I said, I don't mind in these entry starter level positions nibbling a little bit and then adding exposure as it continues to show that it is a winner and worthy of adding capital to.
Got it. Okay, Brendan, I hope that helps you. Let's go to an email now. This is from Peter. He says, does your guest have any optimism for Nutrien at all? It appears to be forming a gradual recovery from the previous lows. They produce potash, which was tariffed early on by the Donald Trump administration. They have seen some pickup. Longer term, where do you land on Nutrien?
Yeah, so maybe if we can pull up a longer term chart, like 10 years, if that's possible. But this is definitely putting in a major low. So we've been highlighting this quite frequently to clients over the last couple of months. We've been highlighting this. In addition, our fundamental analyst, Steve Hansen, has been highlighting this as well, that it's turning around here. So here's this bigger downtrend. We've broken it. And now you're making a series of higher highs, higher lows. What you don't see on the screen as well is that we're seeing a lot of institutional buying, and that is quite positive. And the last point is if we can pull up Mosaic, ticker MOS, and what that is that's Mosaic in the US, that's going to be somewhat of a peer, and it's got the same pattern. So we're seeing this across the board in this space. Yeah, perfect. So it's the exact same setup. So you've had this longer multi-year downtrend from 2022. Now you're picking up and moving higher. So it looks very similar to what we saw here from 2018 to 2020. And then it looks like the next up leg is getting underway. So really like Mosaic and Nutrien here, very timely.
Got it. Okay, I'm going to try and squeeze in one more email before we have to take a break. This is from Ash. She says, could you please provide me with your analysis of Copart?
Perfect.
Copart in the U.S. Let's pull up the chart on that. I have them at, I think 50.28 is where they're sitting today. So they're down just a little bit.
Yeah, so this is one of those names where essentially you're in this sideways trading range. I'd be much more confident if we could clear this 60 level decisively. But right now, it just seems like it's dead money. Like if you invested in this for the last 2 years, your money wouldn't really have worked for you. So this is a name I don't mind adding, but I prefer to get decisively above this high here to confirm that we're seeing higher highs, higher lows.
Got it. Okay, that's all the time we have for your phone calls and your emails today. But Javed will share his new top picks. That's coming up. Welcome back. Time for new top picks from Javed. His first one is Lundin Mining, which does have operations both in Canada and other countries like Brazil and Chile. What do you like about Lundin?
So we've been in this bigger consolidation through the bulk of 2024. And now what we're seeing here is we've broken this downtrend here, starting to push higher. The work that we do shows that relative strength is accelerating. We're seeing institutions stepping in and buying. That's all positive. Now, if we can pull up a copper chart, same thing just over the last 3 years, if that's possible. What I can highlight there is copper looks like it's reaccelerating here. So Lundin is a copper miner. And as a result, if copper is starting to push higher, then that should be a tailwind. So this is perfect. Thanks, guys. And so copper here starting to push higher, accelerating, testing that key 5 level. And if we can get above that, then next upside technical target, I think, is around 6. But the bottom line is you can definitely see that we've got this new series of higher highs, higher lows in place. So.
Got it. Okay, let's go to your next top pick, which is New Vista Energy, which does oil and natural gas. Are you seeing promise here more natural gas than oil, with oil prices sort of fluctuating quite a bit, coming down under the $60 mark?
Yeah, and that's, unfortunately, through the latter half of the summer, fall of last year, we were constructive on energy, and we were wrong. Like, energy really didn't work. So what we're seeing in natural gas, though, is or New Vista, this is a pretty positive pattern. This is also rated outperformed by our fundamental analyst, Luke Davis, so he likes this name. And what I would highlight here is, in technical analysis, this is a really powerful pattern, and it's called an ascending triangle. Let me see if I can draw that a little bit straighter. So here's the top of the triangle. Here's kind of the base. And what you want to notice is there's a series of higher lows here. And that's because investors continue to snap up the stock on the move higher. But what we're really looking for is a breakout of this multi-year range. And even going back all the way to 2023, can we pull up a 5 or 7 year chart on New Vista? I just really want to show you, like, if we can break out here, it's going to be really, really positive from the work we do, like on a technical perspective. But generally speaking, this is beautiful. Thanks, everyone. This is this really big, longer range. And there's a saying in technicals: the longer the base, the longer the time and space, i.e. when it goes, it really starts to move. So this is testing the upper end of this range. We started the show talking about U.S. dollar weakness, commodities if we see further U.S. dollar weakness, that should be a real tailwind for commodities. That's why we highlighted Lundin. That's why we're highlighting New Vista here.
Can you bring the New Vista chart back for a moment? I just want to ask you a question, because we saw these highs. Is it pushing a little higher each time? It was hard to tell from the chart the way it spread out.
Sorry, the lows are higher.
Okay.
So the top of this range is pretty consistent. So all we're doing with fundamentals, with technicals, is showing what the fundamental managers are doing. So what the fundamental managers are doing is, hey, look, at this PE, it's too expensive, right? So at this price earnings ratio, this is too expensive. I'm going to sell. But what's happening here is they're starting to snap it up at higher lows, essentially, which is really positive. So at some point, there's going to be a fundamental catalyst, and that should really drive the stock higher.
Got it. Okay, let's go to your last pick, which is Russell Metals on the TSX. And tell me what you like about Russell Metals.
Yeah, so this is another outperform rated name by our analyst who covers it out of Vancouver, Fred Bastian. So what we're seeing here is a series of higher highs, higher lows. This stock looks pretty compelling. Here's the tariff tantrum, and then since then it's really started to pick up and try and push higher. So like the setup here, if we're correct in terms of this rally through into August, then it should really retest these recent highs here, call it around 46. So another potential 10% upside from current levels.
How big is their steel import-export? Because obviously that's going to be affected by first 25% tariffs and now 50% tariffs. Is that a concern for you moving forward?
So, I mean, that's a question that our fundamental analyst, Fred, and he's talked about that as well. I think he was on our call this morning talking about it. I don't think the effect or ramifications are as big for Russell Metals, but I think that's a question he's better suited to answer.
Okay, so generally you see some forward momentum for this stock.
Exactly, and just the setup in terms of commodity prices moving higher, and Canada showing leadership. We've got this big infrastructure push, and so Russell Metals should, participate in this broad expansion we're seeing in Canada.
You mentioned also that when we talk about seasonality, August is kind of a time where you have to watch or at least be a little more careful. Can you expand on that?
Yeah, so August is the precursor to September. September is historically the weakest month of the year, and this is both in the TSX and S&P 500. So for equity markets broadly, that is really where you see a lot of corrections taking place. So essentially, what our work says is we've worked through the tariff tantrum. Stocks are repairing themselves. Price momentum is improving. We're starting to see the more risk-on areas of the market strengthening and accelerating. And all of this supports a push higher into August.
Which is to watch. All right, Javed, we have to leave it there. Thank you for coming in.
Thanks
Appreciate
for
your
having
time. And we are going to leave it there for Market Call. Thanks for joining us. We'll see you again tomorrow.